Hello and welcome back to the channel. Powerful ATR trading strategy to profit in all market. Average true range ATR is a strong indicator trader used to measure the volatility of the market with simple calculation. It is invented by J. Wells Wilder in the year 1978, used first for commodity, but later it is used for stock market trading. The default value for this indicator is set at 14 days, but you can change it yourself as you wish. A shorter period than 14 days are less reliable, and period greater than 14 days are more reliable and may generate less trading and less false signal. When ATR is high, you can expect a strong uptrend or downtrend. When ATR is low, it is a clear indication that the price has gone in range consolidation or sideways market. If this phase continues for quite some time, this low volatility interpreted as consolidation, continuation, or possible market reversal. Traders also use the value of ATR indicator to properly set their stop loss. Unfortunately, ATR doesn't tell trader anything about market direction. If the ATR is going up on the chart, that doesn't mean the trend is up or vice versa. For that matter, I use MACD indicator to check the validity of entry signal. In this video, I am going to demonstrate how you can use ATR and MACD indicator in your trading setup and make profit in bull and bear market. How average true range is calculated? There are three ways to calculate the true range value, depend on how the candles are formed, and it can graphically be shown as follows. First method, let's assume these are the first two candles, and this is the current high, which is $18, and that is the current low, which is $15.70 for this candle. This is the formula for this method, and when we plug the current high and current low value, the result is $2.30, which it means the price fluctuates $2.30 for the duration of this candle. The second method to calculate true range value. Let's assume these are the first two candles, and this is the current high, which is $18, and this is the previous close, which is $16.10 for this candle. The formula for this method is this, and the calculated true range value for the current candle is $1.90, which it means the price fluctuates $1.90 for the duration of this candle. The third method to calculate true range value, TR. Let's assume these are the first two candles, and this is the previous close, which is $16.10, and this is the current low, which is $15.70 for this candle. This is the formula for this method, and this is the calculated TR value for the current candle, which is minus 40 cents. It means the price fluctuates 40 cents for the duration of this candle. It is important to know that we consider only the absolute value of TR into account, and we ignore the minus sign. How to find the average true range for 14 candles? This is price trend, BLDP stock D1 time frame of finance. To calculate the average true range for these 14 candles, it's so easy. You choose one of the three methods I explained earlier in my previous slide. Now let's assume we choose the first method. First, we find the current high and the current low for all 14 candles. Second, calculate the true range for all 14 candles using this formula. And finally, third, find the sum of all the 14 true range by adding them up, and then divide the sum into 14, and what you find is the average true range of the 14 candles. This shows, or this number that you find shows how much in average the price has gone up or down for the duration of these 14 candles. You can also use other formula and calculate ATR the same, but remember, if you find the negative value for ATR, you only consider the absolute value and ignore the minus sign. That's how you calculate the average true range. What is volatility? Volatility tells you how much the price fluctuate, and ATR tell you in average how far the price fluctuate or swing up and down for the duration of the period. Volatility never tell you bullish or bearish trend strength or how much the trend moves into one direction. This is the price trend, CL stock, D1 time frame of finance. In high volatility market like here and also here, where the price trending strongly downward, the ATR curve shows it is going strongly upward here, and here the opposite direction. Showing the volatility in downtrend is high. The candle normally have a longer shadow compared to the body size, and we see the mixture of bullish and bearish candles side by side. In high volatility, you also need a wider stop loss to avoid false breakout or to avoid high kite pattern. In low volatility, like here, the ATR curve is going downward, the opposite direction, although the trend is going upward with low rate and with low volatility. So volatility can be low while the market is trending higher, and vice versa. You see here the size of the bodies are smaller with shorter and hardly no wicks at all. Price action is calm and the price is in consolidation, build up or sideways market. And you will also need a tighter stop loss. So that is exactly the definition of volatility. How ATR can improve your stop loss for better profit? Most traders ask me why we use ATR to set out a stop loss. As I explained earlier, ATR shows how much in average the price has gone up or down for the duration of the period. We all know that when we enter the trade, the price sometimes have a pullback before heading upward. So in order to not stop out of the trade permanently, we use ATR value below the support or above the resistance, and I'm going to share with you how to do that. This is the price trend QM stock D1 time frame VO finance, I installed SMA 30 as fast moving average to respect the price trend, and SMA 50 as a slow moving average to find the direction of the trend, and ATR with 14 days period to find the value of ATR. Since the price is above the SMA 30 slow, fast moving average, and both of them are above SMA 50, then this price trend considered as a strong uptrend. Now, here you see the prices coming close to the SMA 30, and you see here this hammer which penetrate inside the dynamic support. I decided to enter the trade as soon as the next candle passes the close price of this hammer. So the next candle that passes the close price of this hammer is this candle. So this candle, which it break this dynamic support or resistance here in this case, because it break from the down, and the close here, and I'm going to enter the trade here, and the price at this point, the close price of this candle is $105.90. Now the ATR value of this candle, it calculated at $3.60, as you see here. Now the dynamic support at this point is $101.50. So I'm going to put $3.60 below the $101.50, the dynamic support or SMA 30. So the stop loss is going to be $98. So the entry price is $105.90, and the stop loss is going to be $98. So after that, the price is going up and have a pullback, penetrate inside the dynamic support, and you see this candle, the low price of this candle is more than 98, and the low price of this candle is again more than $98. So I'm not going to get stopped out of the trade. So the price after that is heading upward strongly, and I'm going to ride on this big trend, and I'm not going to stop out here or anywhere. The price around here is about $140, so I'm making very good money. So anytime that the price heading downward, breaking this support, then I can exit the trade. So this is how I use ATR value to put my stop loss for better profit. How to trade with ATR using trial stop loss. This is the price trend Bombardier stock D1 time frame VO finance. I installed MACD indicator with 12.26.9 parameter, and that is the indicator. The blue line is MACD line, and the orange line is the signal line. Now also I installed ATR with 14 days period, and this is the ATR curves. The ATR is going to check the volatility and also the value I'm going to use to set my stop loss, and also the MACD indicator is going to find the direction of the trend and also the buy and sell signal. Now between these two locations, you see ATR value curve is flat. That means the volatility is at its lowest level and the trend is in consolidation. And also you see from the trend that you see the same thing. You see the trend is is basically in consolidation. There's not big fluctuation going on. MACD indicator shows also flat here. The histogram bars are so flat. That means there is not a movement going on and the trend going sideways. And so this tells us that there is going to be a strong move on the way. So we have to prepare for entry. Now, you see after that, here the MACD indicator generate a sell signal here. It means the blue line crosses the orange line while going upward. That is the sign of uptrend direction. So the trend is going upward, and also it generated a buy signal right here. So we decide to enter the trade at this location, at this candle. The price is 750. The close price is 750 at this candle. And then the ATR value for this candle is 40 cents. It means that the trend in average fluctuate going up and down 40 cents. So we develop this 40 cents to 80 cents, that's 2 ATR, and we set our stop loss 2 ATR below the entry of this candle. The entry of this candle is 750, so 80 cents below the 750, that makes it 670, and then this is going to be used as a stop loss. Now the trend after that is going upward, and move with it, the stop loss is going to move with the price, and each time that is going to go up, the stop loss is going to go up. It's going to lock 80 cents profit. Now the trend is going all the way here until this candle that the price is going to hit the stop loss, and you are going to exit the trade and transform the share into market sell, and the share is going to be sold at approximately between $13 to $13.20. So from entry price, which is $7.50, and exit price, which is approximately $13, you make a very good profit. So you see that ATR and also MACD indicator together, it's a very good indicators that you can make trade, enter the trade, and make profit. I hope you like this video. Wish all of you a good luck. And if you think you learned something new, please do not forget to smash the subscriber button. That's all, folks. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.